You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz, and today is 5/6/21. Well, you know that colleges have been accused of not teaching their students important topics, preparing them for successful careers. Well, person you're about to hear from, we don't have to worry about that as far as he's concerned, because he teaches Fintech. In fact, he's in charge of that department at the New Jersey Institute of Technology. I guess this is a relatively new program, and the goal obviously is to have students learn marketable skills so when you go out into the job market, you can actually get a job. What do you think about that and the role of college? I'd like to know what you think. Why don't you send an email to my address, kl@kerrylutz.com. Right now, Dr. Stephen Taylor is with us, like I said, head of the Fintech department at the New Jersey Institute of Technology and finance professor. But Dr. Taylor, you've also had an extensive career outside the classroom as well.
Absolutely, Kerry. Thanks for having me. Glad to talk to you about one of my passions here. And indeed, I have a bit of an unorthodox academic career where I was had training in math, physics, then did a quantitative finance PhD, went into the industry for about 8 years, Bloomberg, Morgan Stanley, a couple hedge funds, and all those roles was more of sort of the amalgamation of programming, mathematics, statistics, and ultimately finance to make it work into some sort of a final product. And my goal now is, like, coming back to academia 4 years ago, was just trying to bring some of the skills that I learned to the classroom to make sure the students have the opportunity to acquire those and get some of the in-demand jobs in fintech and data science nowadays.
Hey, so can you just briefly define fintech for us? Because many of you out there might not be familiar with it.
Yeah, indeed. And it's fintech is becoming sort of a buzzword nowadays, where it's kind of nebulously defined. And fintech, according to me, is more of this the application of a technological idea to a traditional financial service, with the idea of ultimately reducing costs, increasing transparency, and just creating a better product overall.
All right. And we see this happening, with like apps, financial apps, so you can trade stocks wherever. And when I think back about it, I went to Pace University in Lower Manhattan way back when. That whole financial district was full of back offices where they caught up. Eventually, the stock certificates caught up with the transactions, and statements got sent out, and all these things happened. Now, none of those jobs, none of those functions exist anymore. They're all done by computers. You no longer get a statement mailed out to you. You get a statement in your email. So fintech's kind of the continuation of that, isn't it?
Absolutely. That's a great point. I couldn't agree with you more. And one story along those lines I like to give to my students is, if you watch a lot of the stock-oriented movies from the 80s, early 90s, like, there's usually a successful guy in a suit, and they're asked, like, what do you do? And he's like, I'm a stockbroker. Like, I effectively match people who want to buy a stock with people who hold the stock. I'm an intermediary, and that used to be very successful when you're taking multi-point commissions per trade. You can do quite well with that, but now that's, as you mentioned, like, completely gone. There are a few people that do that, but it's largely automated market makers that are matching buyer to seller nowadays, compared to what it used to be. And back office automation as well. It's just it's amazing the progress we've seen in the last decade.
I remember a guy by the name of Harvey Houtkin, one of the originators of day trading back in the late 80s. He got his start it's called Bache, Halsey and Stewart, and he was a mathematical genius, and he was in the department where they calculated accrued interest on bonds when they were sold or purchased. And there was literally like 150 clerks there with adding machines. They didn't have calculators back then yet. And he knew, because he knew his math was flawless, most of what they were doing when they calculated the interest was actually just proving that they had done the formulas correctly. He always knew that he did the formula correctly, so he never had to do the proofs. And he saw that the new digital calculators had come out and they were going for $3,000 a piece. He approached the head of his department and said, look, we get half a dozen of these and you can get rid of the entire department. And that's exactly what happened. And he was head of the department, supervising the 6 people on the calculators. I mean, where we've gone from there is so far beyond. But where exactly is fintech heading? Is it going to be where the algorithms just run it all, where we don't really need any human financial analysts? Is that where it's coming to?
And I think that's a great point you made, especially in the fixed income world. And just to add briefly to that, like right now, I can fit the entire transaction history of basically the full U.S. corporate bond market for the last 20 years on my hard drive on my laptop right now with FINRA's trade database. And it's incredible, like just to mine that data, to find it, to automate that. I'm just going over this, comparing that to like the usual manual, like one person going through one bond at a time. One guy can do literally the work, as you said, of like 10, 100, or sometimes 1,000 people. But to your point of like where is it going ultimately? Like, are we just going to see a fully automated financial system where roughly like the automation becomes a utility around the system? I don't think it's going to be quite that extreme. Just because like I know in areas, for example, of like asset management or trading strategy development, it's almost impossible to do it in a fully systematic fashion. Occasionally you have events like COVID-19 or some random event with a company that you really need a human being to intervene and sort of say like stop algorithm or go into a different regime algorithm, just because it's hard to capture everything. So there will be people in the loop, but you need those people to be really conversant in the language of technology, math, stats, and really understand the details of the internals going on behind the algorithm.
And your students, tell me what you're teaching them here. Quantum mechanics or quantum finance? I don't even know what the topics are. I'm sure if I looked down the curriculum, I wouldn't even recognize these courses.
I actually love quantum mechanics and physics, so like quantum field theory, string theory. I spend a lot of time on that, but it's I think it's like not really too applicable to finance. There are some people who try to take methods from those areas and apply them to derivatives pricing, but I think it ultimately leads to overcomplication of some of the technical features involved in those ideas. So my main focus is always just to get the students programming. A lot of them have no programming experience, so trying to start with a very simple language like Python, teaching them the sort of tools of the trade and finance, Pandas, NumPy, SciPy, and but just make sure they can, like by the time they leave the class, and especially the program after 3 or 4 years, they can go from sort of broad ideas that their manager might give them to a quick prototype in their script, and then being able to understand it enough to work with, say, a dedicated tech team to port it over into the firm's infrastructure.
It's really interesting that the way things have developed and where we are now compared to really even 20 years ago. Remember 9/11, and it literally shut down everything, the financial system, the telecommunications system, all of these things. And from there, we got a more distributed system where the parts can operate independently of one another, and there's backups for everything. So really, the system's much more seamless. We heading towards more of that? Are we just heading towards more powerful devices?
Don't just survive, thrive. The Financial Survival Network.
Goldterra Resource Corp is a gold exploration company that has assembled a highly prospective district-scale land position on the doorstep of the city of Yellowknife in Canada's Northwest Territories. Goldterra is currently focused on expanding and delineating gold resources at the company's Yellowknife City Gold Project, with a goal of discovering over 5 million ounces. With ready access to infrastructure and multiple high-grade gold discoveries, Goldterra is on track to re-establishing Yellowknife as one of the premier gold mining districts in Canada. Goldterra trades as YGT in Toronto and YGTFF on the OTC. For more information, go to goldterracorp.com. That's goldterracorp.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Yeah, I like to hope so. I think like the idea you described will overall lead to a more robust system, and like more broadly, just in terms of September 11th, you had the World Trade Center collapses. That was one of the hearts of the financial system. But even if you go to more like not like terrorist events, but more like financial crisis events like 2008, there we had a crisis largely driven by 10 say big name banks, where a lot of the risk was concentrated in those single names. And we certainly got more distributed from a risk, overall systemic risk perspective now, where now we have the hedge funds are growing in number. Risk is sort of more oriented on the distributed out of the buy side. And I think it's like when you have too much risk concentrated in too few names, these are concerns both on the finance side and also the infrastructure side, as you mentioned, like trading exchanges, for example, backed up redundancy systems. So like the more distributed we get, the more robust we get. Is my view.
Yeah, that makes sense. Well, I don't know if you read the book by Michael Lewis, The Flash Boys, but in that case, Citadel, it was actually the brokerage house, I believe, or the whatever you want to call them, hedge fund market maker. And they figured out if they laid their own fiber to Chicago that they could front run everybody's trades. And they continue to do it to this day and have made billions of dollars, taking fractions of a cent or a few cents on every transaction. Nobody even notices that they're skimming the top of the pot, if you will. But isn't that something where fintechs really kind of messed us up here a bit?
Yeah, and to that point, I'm not sure if that was Citadel, and then there was a prop trading firm exactly to what you mean, where they set up really high, really fast transmission lines where you can go something like 0.9 or 0.95 speed of light between Chicago and New York, and they're arbing like SPY versus SPX, knowing that if one goes up, the other's going to have to do the same thing. And to me, that's I don't really consider that front running too much, even though I take it your point of where's the real economic utility behind that? But it's really just sort of taking advantage of being the first player. And you could take this idea what if you're developing trading strategies and you sort of come up with a very very fast, very high quality data pipeline of where you're going from data to decision to execution more rapidly than everybody else, and you're getting in first on that. Say reading the news analyst reports, for example. Well, it's effectively front running in the sense that you're the first, but there's nothing wrong with that. There's nothing immoral. You're the best at what you do, so you should get the reward. And ultimately, I think it's to your main point on this. We should really think about the system as a whole. Is this justified? When we have people making profit off of activities that are questionable in terms of their overall economic utility, should we put in rules and provisions to sort of circumvent this? I think those are all good points.
Yeah, some people have raised the same question about the entire financial system, that we got way too many people involved in it. We're over financialized, and that's working to the detriment of the industrial economy and the so-called real economy. We'll leave that for others to figure out, but I just assumed it was Citadel because they seem to have gotten the biggest at it and the best, but he never did actually mention the company by name. So, but just to get that kind of advantage, and you add no utility to the system, they would say, oh no, we're adding liquidity, and the liquidity only exists when the market's going up. When the market's going down, that liquidity just seems to disappear in the blink of an eye. So question is, again, where are we heading? And at least we know wherever we're heading, your students at the NJIT are going to be there, right?
Indeed. And to that point, I really hope we're heading in a direction of a simpler system, of a more transparent system, and of a system of reduced cost and sort of less complexity and overhead. And I would love to see it get back to America in the 50s, 60s, where a lot of finance jobs were just sort of routine jobs. And there wasn't a lot of compensation involved. There were routine jobs, and everything was more fair and stable in those days. That's my hope for the students, to get involved in this on the on the tech side. Let's implement and automate away the tedious parts, and let's keep the human in the loop on the really hard decisions. But overall, let's make progress towards something better and something more fair for everybody.
And if you remember that movie along the lines of what you just said, The Big Short. So there's a guy programming in, some big bank's back office or back end, and nobody really knows who he is. And he was a aeronautical engineer, and he wound up on Wall Street because that's where the money was. And he figured out that all the mortgage-backed securities were worthless, but he figured it out before anybody else figured it out, so that his team was able to dump them on all the other people who didn't understand the market had changed. But what I found the most disturbing about the whole movie, aside from the ethics of this big bank, was that this guy, he belonged in industry. He should have been working at Boeing or at SpaceX or someplace where he'd be making stuff rather than figuring out how to beat algorithms for his career,
I couldn't agree with you more, and it's something I think about in my own self. What could I have done better with the 8 years of my life where I was in finance, effectively just trying to make money, and that was one of the main motivations to come back to academia. But on a broader scale, let's get our smartest minds in the country working on the hardest problems, the more socially impactful problems, ones that are really more going to influence the society as a whole rather than just sort of, profiting off of things.
Yeah, we all wonder about the road not taken, right? And then it always winds up there's a U-turn someplace and you wind up where you should be. And I guess your place is teaching these young minds the value of financial technology, how it can make a difference in their lives, everyone else's around, and how to enter a career that's going to compensate you well, and you'll contribute something. Well, we appreciate that. Hey, is there any place we can find out more about you, Dr. Taylor?
Yeah, sure. I have my LinkedIn. If you Google Stephen Taylor, NJIT, will come up. Feel free to reach out or email me anytime. It's taylor@geodesic.pro. I'm happy to talk.
Yeah, and if you're an aspiring fintech person, or you've got a relative, a child, son, daughter, reach out to Dr. Taylor. I'm sure he'd be happy to correspond with you and help offer you some guidance for what really is an up-and-coming career. Every one of those apps on your phone that does something with your money, somebody had to create it somewhere, and that's where fintech comes in. Any questions or comments for Dr. Taylor, you can send me an email to my personal address, kl@kerrylutz.com. And make sure you go over to Financial Survival Network, sign up for our newsletter. Dr. Taylor, a real pleasure, and thank you so much for coming on.
Appreciate it, Kerry. Good talking to you.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.